Hello everyone, and welcome back to our channel. Today, we're bringing some important updates that could significantly impact foreign investors and Australian expats selling real estate in Australia. As of January 1st, 2025, there will be key changes to the Foreign Resident Capital Gains Tax, or FRCGW, that all Australia property owners need to know about. So, if you're involved in property transactions, make sure to stick around as we break down these changes and what they mean for you. First, let's clarify what the FRCGW is. The Foreign Resident Capital Gains Withholding Scheme was introduced back in July 2016. Its purpose? To ensure that foreign investors fulfill their Australian tax obligations when selling property. This scheme is crucial for maintaining the integrity of the Australian tax system and ensuring that foreign investors contribute their fair share. Now, let's get into the meat of today's discussion, the key changes set to take effect in 2025. 1. Increased withholding rate. The withholding tax rate will increase from 12.5% to 15% of the contract price. This means that if you are selling a property, 15% of the sale price will be withheld at settlement. For example, if you sell a property for $1 million, that's a whopping $150,000 that will be withheld. 2. Removal of the $750,000 threshold. Previously, properties sold for less than $750,000 were exempt from this tax. However, starting January 1st, 2025, all property sales will be subject to this withholding tax, regardless of the sale price. This change could have a significant financial impact on lower-value property sales, making it essential for sellers to plan accordingly. 3. Applicability to option contracts. Furthermore, if you have an option contract in place and you exercise it after January 1st, 2025, the new withholding rate will apply, even if your original agreement was signed before this date. This means even if you thought you were exempt, if you execute the contract after the new rules kick in, you'll face the higher withholding rate. So, how do these changes affect you? For Australian residents selling property, if you're an Australian tax resident selling your property, you need to be proactive. The removal of the $750,000 threshold means you must apply for a clearance certificate from the Australian Taxation Office, ATO, before settlement. If you don't, buyers will be required to withhold 15% of the sale price. This could significantly impact your cash flow, especially if you're relying on that sale to fund another investment or purchase. For non-residents and foreign investors, for non-residents, every sale of Australian property will now incur that 15% withholding rate, regardless of the price. If you're a non-resident seller, you might be able to apply for a reduced withholding rate under certain circumstances. We highly recommend seeking specialist tax advice to explore your options and understand how to best navigate these changes. Now that we understand the changes, what should you do next? 1. Understand your residency status. Make sure you know your tax residency status under Australian law. This will affect your tax obligations. If you're unsure, consult a tax professional to clarify your status. 2. Apply for a clearance certificate early. If you are an Australian resident, apply for your ATO clearance certificate well in advance to avoid last-minute complications. Remember, the processing times can be unpredictable, so don't leave it to the last minute. 3. Seek professional advice. Consulting with a tax specialist is crucial. They can help you navigate the new rules effectively, reduce your withholding tax liabilities, and ensure you remain compliant under the new regulations. 4. Stay informed. Finally, keep an eye on any future updates or changes in tax laws. The landscape can shift quickly, and being informed will help you make better investment decisions. In conclusion, these changes to the FRCGW are designed to increase compliance among foreign investors, but they also introduce new complexities for Australian residents. Understanding the higher withholding rates, the removal of sale price exemptions, and the new compliance requirements is critical for ensuring a smooth property sale process. If you found this information helpful, please give us a thumbs up, subscribe to our channel, and hit that notification bell so you won't miss any updates. If you have questions or topics you'd like us to cover in the future, leave a comment below. Thanks for watching, and see you next time.